everyone, and welcome to our YouTube channel, Moneyline with Nancy at TV. In case you're not a subscriber yet, please do subscribe. Just press the subscribe button as well as turn on the notification bell so that you can get notifications when we upload our videos. Don't also forget to subscribe and join, follow, like our other social media platforms. Of course, you're seeing it right about now. Don't also forget to share this video across your platforms. Enjoy the video. All right, welcome back. As you can see there, Ugodre Obi-Chukwu is joining me. He's the founder and chief executive officer at Nairametrics. Hello, Ugodre. Welcome to the program. Hello, Ugo. Can you hear
Nancy.
me?
Good to be here. Can you hear me?
Yes, I can hear you. How are you?
All right, fine. Very fine, thank you. How have you been?
I'm okay. Ugo, what's happening? I need to ask this. This your new dress code. What's happening? Or is it just a coincidence? Yeah, I'm a bit suspicious now. What did happen?
We're trying. No, it's part of patronizing made in Nigeria and made in Africa. So that's the new look now. We have to practice what we preach.
What we preach?
That's the whole thing.
I
Yes,
know
we
that's
have
what you are going to say, and don't make me feel guilty.
Yes.
Do you understand?
Yes,
So I know that's what you're going to say. But let's get straight into the matter of the day. For the past how many days now, I must even start by saying, of course, since March of 2024, that the CBN released that, the policy around that banks need to recap from 2024 to 2026. And it's just 6 months away. Since that time, I've really, narrowed my vision on the banks. So anything banks do, I'm always very particular, of course, coming from the experience of what happened at the last time. So for the past few days, Zenith Bank came to, of course, my vision. That is within what I'm watching. And was it today I was seeing all the dailies reporting their earnings? What do you have to say? Of course, Nairametrics, of course, and I'm sure definitely it's also on your site. What do you have to say about this? Bearing in mind that Zenith Bank has met the recap deadline. It's one of the banks that have said, oh, guys, no need to worry, we're there. What do you make of these results, these corporate actions from Zenith Bank?
All right, thanks a lot, Nancy. This has been one of the results that the market has been waiting for. Recall Zenith and some of the Fugas typically publish half-year audited accounts. And so because it's a half-year audited account, it's typically subject to a bit more scrutiny than if it's just an interim account. And so this result is half year, which ended June 30th. So typically, most other banks had published their half year numbers as at July, August. But because Zenith is one of those banks that publish audited half year accounts, the CBN typically takes a bit much longer to scrutinize. So finally, the wait was over last week, and the market saw Zenith Bank's numbers. And as you had mentioned earlier, the bank posted a pre-tax profit of 625 billion naira. Nancy, that is just in 6 months, 625 billion naira. I don't know how many companies can generate this much profit in just a matter of 6 months. The numbers came out very, very strong. Earnings, net interest income was up 90%, about 1.4 trillion in 6 months. Non-interest income contributed another 613 billion for the company. And at the end of the period, profit after tax came in at about 532 billion as well. Zenith Bank, as you may also know, now has a total asset of 31 trillion. Nancy, that is just astonishing. This is a behemoth of a bank. And remember, it is also one of those banks that have met its recapitalization target. We are ahead of time. As you did mention, 6 months to when the central bank had given all banks to meet those targets. So they've met it well ahead. And it appears the bank just seems to be on a different tangent entirely. Now, what was probably even more shocking to me was, despite some of the concerns, I think I was here the last time when they issued released one of their results, and we spoke about earnings and recapitalization and forbearance issues. Despite all those concerns and fears that the bank, or some banks might not pay dividend, Zenith Bank went ahead, Nancy, and declared 1 naira 25 kobo dividend, a 25% increase from the 1 naira he paid the same period last year. Those are just very strong numbers and a strong statement to investors that the bank is solid despite all the challenges that we all face in the economy, and is always, or appears happy to reward shareholders. So, I mean, for me and for those of us who are shareholders, this was just very pleasing, Nancy.
So let's dig deep into these numbers because, like I said at the beginning of the program, I'll be going beyond the headlines, of course, and let's take a look at what these earnings really mean. Zenith reported a strong rise in gross earnings, and that was largely driven by higher interest incomes. To what extent is this as a result of the yield environment that we're seeing, rather than perhaps underlying organic growth? Would you say that is organic growth or the yield environment?
I mean, I think that this is a combination. I guess when just maybe to help listeners or your viewers, I guess when you say yield environment, you mean because we're in a high interest rate
Interest rates,
environment,
yes.
and then of course a lot of banks are also making significant income from fixed income securities. But that's the market that they're operating at the moment. But if you also look at their numbers, the numbers are actually quite diverse. This is a bank that is earning, like I mentioned, over 1.4 trillion from net interest income. Then non-interest income, which is another aspect of how banks make money, which is mostly commission and fees. They're also contributing another 613 billion as well. So, I mean, that's as organic as it gets. Now, if you compare this to the year before, and that's where there's a stark difference. The year before, a lot of banks made most of their money from FX valuations. I'm sure if you recall, banks were declaring massive profits out of FX valuation. And at the time, it kind of looked like they were not going to be able to match those sort of gains again in this year. But I mean, from what we've seen, and that was what was surprising to a lot of us, they appear to have matched that and even surpassed it without, the sort of massive FX gains that we saw last year. So this is as organic as it gets. This is based on the bank's core business, and that is what is actually quite pleasing to a lot of analysts when the result came out. Nancy.
The bank has raised its interim dividends, of course, to 1 naira 25 kobo. Do you think that this should be pleasing to investors, perhaps as a signal of strength of the bank, or should it be a way to reassure investors ahead of recapitalization plans, even though it has met the recapitalization plans, to say, guys, we are there for you, no shaking? You understand what I mean? That we can still be a profitable bank for you as shareholders.
So Nancy, I think it's a bit of everything. Remember that the capitalization that banks are currently or have currently faced excludes their return earnings, excludes bank return earnings, and for a bank like Zenith with a huge return earning, it just makes a lot of sense that some of those return earnings are rewarded, are given back to their customers or to their shareholders, I beg your pardon. And so that's what they basically demonstrated, that look, as much as we've been able to recapitalize, because recapitalization at the moment meets with the share capital requirement, which is the ordinary share capital, excluding return earnings, the bank still has robust return earnings from the profit that it has just generated and can pay dividend from it. And not just pay dividend, match, surpass the prior year dividend. And that's what it should. And then you can also see this in some of the bank's ratios. if the bank is doing a return on average equity of about 24.8%, return on average assets of over 3%, I think an average of 3.5%, then that just shows how solid the numbers are and how solid they are able to back some of those, payback or return of money or capital to shareholders. Now, also, what you also want to look at, because I mean, for those of us who also review bank numbers, we
Mm,
tend to look at certain other indicators, Nancy. We look at capital adequacy ratio,
ratio.
liquidity
Mm.
ratios, because these all determine how solid the bank
The
balance sheet is.
NPL, yes.
Yeah, yeah, despite their numbers. And
Mm.
everything all came out improved from what we have seen. NPL was 3.1%. It used to be 4.7%. So that's an improvement. Capital adequacy ratio at 26%, way above prudential requirements. Liquidity ratio at 69%. So those numbers are pretty solid. And so when you have those sort of numbers, what you're basically telling investors, look, we have just as any other bank experiencing tough times with non-performing loans
For
over
the,
the years.
let me stick with this non-performing loan since you're with it.
Yeah,
It declined to 3.1% from around 4% where it was before. Do you think that
yeah.
this ratio now determines genuine asset quality, uh, or perhaps a temporary, um, let me put it this way, temporary effect of loan write-offs and
I,
provisioning?
I,
Yes.
I think this is a clear indication that the bank is likely going to continue to produce a non-performing loan ratio that is well under the prudential guidelines of I think 5%. Now, when it was 4.7%, it was a little bit troubling
Hmm.
at that time because it was close to the 5% marker. But now at 3.1%, that provides enough buffer for the bank. And then the bank has said, you know what, we have taken the right provisions that needs to be taken. Doesn't mean we're not going to recover some of those loans back, but let's just take those provisions, clean out whatever that is there, and move forward. Now, recall this is a bank that is under a new management, and the new management is very keen, as it appears, and as some of us that have listening to their earnings call, to move the bank aggressively into this next phase of growth. And so that's what some of us are excited about, and we're paying a lot of attention because as an investor, all I'm looking at is look, I want to be sure that my dividends are paid on time. I want to be sure that capital appreciation is continuing with the bank. I want to be sure that the bank is solid and is competing not just in Nigeria and competing outside Nigeria, and competing within its core area of competencies. Those are some of the things that we want to see the bank do. And appears that in just under a year, this bank appears to be moving in that direction. So it's actually a huge target that the bank has given itself. And so it's amazing to see how well it's able to execute over the next few years. But this is exciting times for shareholders of any bank like me.
What role do you think that digital transformation and fintech integration um, played in strengthening the balance sheet of this bank?
Well, I mean, this is a bank that I think it was, I don't know if you recall whether it was early last year or something when they did have challenges with, with some technological transformation that they did. At least I did read that in the news. But it appears those things are now behind. The bank appears to have moved forward for some of the customers that we've spoken to at Nairametrics. They have seen improvement in the way the bank's applications currently execute, which is very important to customer retention. Also, some of the bank's online services seem to have improved extraordinarily as well. And that is also helping how the bank is moving forward. Now, what would also interest you to note is that the bank, despite even having some of these improvements, have also shown that it can keep its cost to income ratio pretty low. And so, if I recall, cost to income ratio was tracking 46 or 47% or thereabout. And so that is quite impressive for a bank of that size, right? Because typically, the larger a bank is, especially a bank's balance sheet, it's often very difficult to contain cost to income ratio below 50%. So this bank is now running the cost to income ratio of less than 50%. So that kind of speaks as well to the impact of digital transformation in enabling cost efficiency for the bank. And that's some of the things that we want to see, because the more efficient the bank is in terms of cost to income ratio, then the more that is able to give us back dividend as shareholders. Nancy.
Did you see in any way in these results posting 2.5 trillion naira in gross earnings? Do you see a tight monetary condition impacting these numbers? In any way, Cardoso and his team, with rates hovering around 27.5%. Of course, there'll be new decisions tomorrow after the MPC, but we've had a very fairly tight monetary condition. Do you see it at all in these results?
Very much so. Banks generally do well when you're operating in an environment of tight monetary conditions. Now, what this basically means is that interest rates are higher, as you very well know. So you're seeing interest rate at above 20%, and this is basically risk-free interest rate, Nancy. And borrowing rate from the market is at 35% for people who want to, take loans from banks. And so this, of course, has a way of passing through into banks' top line revenue growth, which is what you're seeing there, gross earnings. However, that also still comes with risk. Risk is that these banks are also exposed to likely default of some of those loans, and that the bank themselves also face huge cost as well, because just as things are climbing, expenses are climbing across the country in terms of goods and services, these banks are also, they don't operate in a vacuum. They also operate within this ambit. And so expectedly, you also see their costs go up. So these are some of the things that you're looking at. And yes, it has fed through into some of these numbers. But here's the catch. And this is what some of us are expecting and what we forecast. Banks have raised significant capital ahead of monetary policy loosening, which a lot of us expect from next year. I personally see a rate cut happening this week. So we believe that once you start to see rate cut happens, rate starts to go down. Rates are actually started going down, even though it hasn't started hitting the core market yet. But rates will eventually go down. And when this goes down, banks that will be able to still maintain this sort of growth numbers are banks that have the balance sheet to compete, and banks that basically understand the needs of businesses that are driving or that will drive economic growth in Nigeria. So those kind of banks will be able to support the real sector with some of the capital that they've raised. And this will create, or this should create, exponential growth for the banks. Now, let's also mention that banks that are also technologically efficient, that have incorporated AI in their systems or their risk management assessment, should also be able to keep non-performing loans ratio pretty low and continue to grow their capital adequacy ratios. These are just some of the expectations that we have from all of this, Nancy.
In terms of regional competitiveness, do you think that this bank will still, hold its head above waters, especially in light of the new capital frameworks that we're seeing, even from the regulator? And perhaps in 2026, the financial landscape, the banking landscape will change. A colleague of mine traveled to, was it Rwanda? We were talking, was it 2 weeks ago? And he told me, is it Rwanda, one of these African countries? And he said, Nancy, when I traveled, there were many Nigerian banks everywhere. So in terms of regional competitiveness, do you still think that Zenith will still be there?
Yes. What is pretty interesting is I think there's a unique way that Zenith seems to execute that might be different from some of its competitors. I think the bank kind of knows where it mostly makes a lot of its money from, and most of it, of course, will come within its core corporate banking services in Nigeria. However, I think the bank is also very positioned to make a lot of money from regional expansion, which we've seen a lot of Nigerian banks do. And the CBN is also very keen on how banks are able to expand in terms of regions or outside Nigeria without also impacting their core earnings or their core balance sheet as well, or without increasing risk to their core balance sheet. We know that Zenith operates in a number of banks outside, in a number of countries outside Nigeria. So yes, it will be interesting to see how this pans out over the next few years, especially with increase in capital. But I don't think that this is something to worry about. I think Zenith is one of those banks that you would see how well they're able to corner the market. What is also pretty quite interesting is that they also seem to be very methodical with the way that they expand. So while some banks are looking at aggressive expansion outside Africa, I think Zenith is actually looking at markets that suit its own business model and where it can compete to lead, and that appears to be its own style rather than going after market rather than going after market growth or market significant market share. So that's what it seems to be doing. And as far as we're shareholders, all we want to see is the bank to continue to meet sort of profits that is minting and expand its balance sheet as much as it is. In fact, I guess the only concern for me is that I want to see the share price hit the sort of numbers that some of us expect, even though at the moment the share price looks just right for some of us to get in. But this bank is way, way, way undervalued at the moment.
Do you think, are you perhaps recommending like a buy where it is now, their stock? Yes, for perhaps those that are watching, I recommend
Nancy, you're trying to get a free
consultancy.
recommendation. But of course,
you know,
for people who subscribe to our service, follow the money. Zenith has been one of those stocks that has been on our buy list, and it will continue to be on our buy list. In fact, probably even a super buy now. So I'm just giving that out to some of your
audience.
viewers.
Yes.
Yes, at the current share price,
Of
it
course,
seems
we're a
like it's
financial show now, Ugo. So insights here and there. This is what we do for a living. But dividend payout, of course, half year 125. That's 1.25 kobo. Where do
yeah.
you see it? This interim dividend. What do you foresee for full dividends?
That's a good question. Once you start doing this dividend thing, you
And you are
cannot
and you are and you are magnanimous about it.
exactly you cannot stop, because for us, what we want to see is more dividend. I mean, I think that for me, anything that is above 25% of what they, in fact, 20% of what they did last year will be super rewarding for shareholders, and that's what I would expect from the Zenith Bank by the time they declare
Okay.
their full year number this time last year, this time next year.
Yes. So as we close, I saw from the numbers, of course, that customers' deposits grew to 23 trillion naira. How critical is deposit mobilization for this bank? 23 trillion naira in customers'
Yes,
deposits.
I mean, yes, deposit mobilization is very important for banks because banks need deposits so that they can basically lend more, especially in this period where there's a lot of liquidity out there. Just for some context, this time last year, deposit was under 20 trillion, was at 19.6 trillion or thereabout. So now we're seeing deposit at about 23 trillion, which means that there is a renewed aggressive drive with how the bank is mopping up a lot of the deposits that the central bank have always said is out there, because central bank says we have money supply of over 100 trillion or thereabout. And so Zenith Bank has 23.4 trillion of that. I mean, you want to put that into context. I don't know any bank, at least based on some of the numbers that we've seen, that is close to this sort of deposit numbers at the moment. It is way ahead of its Fuga's peers when it comes to deposit mobilization, except for one of them that I think, except for maybe Access Bank,
Access Bank.
that probably has a lot more deposit because of course, how well spread it is across Africa. But Zenith Bank, in terms of Nigeria itself, the core Nigerian asset, probably has the most deposit that we've seen. So, and Nancy, deposit is very important to banks because the more deposit you have, especially when you are taking deposit at a lower cost of funds, and that provides banks with a higher margin. And that higher margin at the end of the day feeds into the bank's bottom line. And so
Okay.
that is why being able to mop up deposits for Zenith Bank is very critical for how the bank executes on its growth plans.
Okay, Ugo, I wanted to ask you what you expect from the MPC meeting at the end of the meeting tomorrow, but you've said it that you expect the MPC to cut rates. We'll talk after the
Yeah,
meeting tomorrow, and let me see
yeah.
if you're right on the
Just
money.
to take Yeah, yeah, I can put my money where my mouth is. We're looking at. I'm personally looking at a rate cut of 25 dips.
Okay.
I know that some have said, maybe it's time to hold, but I kind of think sometimes you look at the mood and see how it goes. If they
Okay.
don't cut, then that will be one full year of not cutting because the rate has been
But
stagnant for.
there is still another meeting in November. Anyway,
I
Ugo,
know.
we have to go now. Let's talk again tomorrow, my friend, so that we'll know if you're right on the money.
I'm available for you
Yes,
anytime.
yes, yes. All right. Thank you very much. Ugodre Obi-Chukwu is the founder and chief executive officer at Nairametrics, and we've been looking at the earnings call updates, of course, from Zenith. Like I mentioned at the beginning of the program, 6 months to recapitalization, so anything banks now should catch your interest. Thank you for making it up to this minute watching the video. Thank you all. Don't forget to subscribe to our YouTube channel, Moneyline with Nancy TV. Like, follow all our other social media platforms where we keep you up to speed with fantastic interviews, as well as markets, personal finance, business, and economy information. This is the best place to be. I'll see you all again in the next video.